All right, there we go. Welcome again. Sorry, LeapMeet 44, November 2021 TradeLog review and interactive Q&A session. So as I was saying, one of every single one of you should be keeping track of the trades you take in a trade log with the detailed notes. I am at a point in my trading journey where I don't need to do that anymore, but I still keep track of my trade logs. I have trade logs from like 5-6 years ago when I first started keeping tracks of every trades that I take, because that's how you learn it. That's how you can go back and visit the mistakes you have made and what you need to be improving, or simply just see how far you have come, right? If you don't keep a trade log, you're basically trading blindly. You have no control over things that has happened in the past, because you're not going to go back to your broker statement and look at the mistakes you have made. And even if you try to do that, you won't be able to make any sense of it, because that's not what they're designed for. So that's why I encourage you, every single one of you, to keep track of every single one of the trades you take. Very, very important. I promise you, if you do that, it will change your trading game 100%, because your mistakes and your success will be in front of you. You will be able to go back and take a look at it and learn from it, most importantly, and improve upon it. When I first started keeping the trade log, I would decide maybe like 3 points or 3 mistakes, top 3 mistakes that I made that month and that I need to improve upon, and write it down on a piece of paper or print it out. And I put it on top of my screen, like right on top of it, so that during that month, whenever the same situation come up, I know not to repeat that mistake. 2-3 months, avoiding that mistake becomes a habit. And once it's a habit, then you can take off that paper and forget about it, because now you have trained yourself and your mind to think about trading a certain way. Like it could be anything. When week is bad, don't trade. When you wake up and market is red, don't trade until it turns green. Anything. It could be anything. Don't average down. Don't take trades more than your account allows you to. It could be anything. But that is how you're going to improve. Correcting your mistake and making it a habit to do so. That is why TradeLog is so important, because otherwise you won't know at the end of the month. You're not going to remember which trade you took in the first week of the month, or even last week or a week before that. It's impossible to keep track of that. And I see a lot of people not doing this, and then years later, when they do start to do it, they're like, wow, this completely changed my trading game. So I encourage you again, every single one of you, to do it and take detailed notes, especially for trades that didn't work, so that at the end of the month, you can correct those mistakes. That being said, let's take a look at this month's trade log. Can you guys see? All right. So November, fantastic month so far. Up until last week, when we got COVID news and a bunch of other bad news, up until last week, the market was absolutely on fire. If you did not make money this month, then there is something wrong with your trading system, and you need to take a look at it and see why you did not make money this month. Because if you compare November to May, June, July, you will see that the market is totally different. It's very easy to make money in this market. Even if you are new at trading, new at option trading, these are the months where you need to take advantage of it, follow the rules, but take advantage of it. And you should have made money this month. If you didn't, you either broke the rules or you made some mistakes that you need to be looking at. And this is where the TradeLog comes in the picture, right? So every single trade, why it failed, analyze it, correct it. Because if you can't make money in the good month, you will find it very, very hard to make money in a bad month or average month. So November was a great month for market and even greater month for us. We started with the first week of the month we started with a banger. Like we had absolutely 100% success rate, 5 trades that returned 100% plus on our investment at highest point. But every single trade we took that week worked out. So if you traded with me or even took another suggestions that I told you or I suggested, you should have made money. Even if your account is 10,000 or lower, there were like plenty of trades where you could have made money. 4 out of 5 trades that return 100% plus were within your budget if you had $10,000 account. So that's something, right? But there were plenty of opportunity in the first week. We did not make a single mistake and everything worked out great. So there is no comment from me for that week, 100% success rate. Comes week 2, another week that was absolutely crazy. First few days, so Monday was amazing. We made 4 trades, 100% success again on that day. And then Tuesday, Wednesday, Thursday, I remember were like super slow. So we trimmed down the positions we take, right? So these are the days you want to avoid trading on. These are the days where you're like, okay, my account is small and I should not be trading on this day. I say this during our morning watch list and during our morning sync up before market opens that the week is looking, the day is looking like a weekday or an average day. It may be trading sideways, so be careful. If you have a smaller trade, be patient. Don't force trade. I give plenty of hints here when the market is tough. So even if like, let's just say, oh, there is another 100% one. Yeah, so I missed that one. But even if like when market is tough, yes, it's easy to lose money, but only if you're not careful. I personally, if I have a smaller account, I close my laptop and go away. When market is tough, when day is tough, when market is trading sideways, especially if you're new or have a smaller account, avoid trading on those days. You will save yourself a lot of headache and a lot of money. You may miss on some trades, like, yeah, we did still manage to take 200% plus return on investment trades on those hard days. But for a smaller account, is it worth the risk? No. So when I say that, when I mention these things in the room, I hope you're reading it and I hope you're following it, because I'm saying it from experience. I have been where you are, and I was able to get out of the position you're in and manage to grow my account where none of the positions I take or even $30 contracts that I take is not expensive to me. But to get to that point, I had to avoid days where trading was hard. I call them like landmine days. So either you sit on the sideline or you take risk. If you don't land on the landmine, you will be safe, you will make money. But if you do, it will blow up your account. Simple as that. So just avoid landmine days. Why take that risk to make $100, $200 extra? You're going to risk like six, 700,000, 2,000 in some cases. What's the point? The risk reward ratio on these days is not great. So just avoid it. And then comes Friday, and absolutely banger of a day. We had so many trades. Shop, Google, especially Shop went completely bonkers on that day. Every single trade we took was less than the account size, like for the 10% or $10,000 account, and every single one of them provided good return, except this Amazon one, which failed. It's fine when you play lotto, that's the risk you take, but every single one of them returned like 450, 2,000, 1,200, 1,400, 350. So if you avoid days like this and focus on taking trades like this day, where one account, one trade can completely change your account. Like imagine taking the Shop trades at 420 and selling it at $11. That's $600-700 play. Just like that, if you take two plays, you will increase your account by 15% in one day. But you will be able to do that if you're not stuck in any other positions that you took on a bad day. I personally would avoid trading if I'm just starting out on those days. I personally would take my own advice and be like, okay, I'm going to sit on the sideline and not take trades. But in our room, we have members who has $2,000, $3,000 account, as well as $500,000 account and $1 million account. So we have all type of people, right? So I personally have a huge account. So trading on those days, I cut my positions by like half. So my risk is already like half than what it usually be. I usually trade with about 3% of my account in each position. On day when I find it tough, maybe 1% or 1.5%, sometimes even 0.5% of my entire account size. So if I lose on those trades, it's not going to affect me one bit. If this big players or this big account holders in our room lose 1 or 2% of their account on bad days, it's not going to affect them. But if your account is $10,000 and you lose $1,000 off that, that's 10% of your account size, and that is going to hurt you. And that is why I'm stressing this point so much, that when market is tough, just avoid trading if you're new or small account. Don't follow anyone for that matter, not even me, because listen, we are all in different part of our trading journey, right? So you need to respect that. You can't come in and be like, all right, you know what? I'm going to start making money. My account is $10,000. I'm hoping to make about $10,000 or $20,000 this year trading options. It doesn't work that way. I got to where I got, and the other people got to where they are by following the process. You can't just come in and hope to achieve the same result that took me personally 8 years to get to. Right? So you have to put in your time, you have to put in your work, you have to put in all these rules to work for you so that you can get to where I am in not 8 years, but maybe 3 years. But if you're hoping to get there in a month, that's unrealistic, right? So keep that in mind. And these are like important topics. It's nobody talks about it. Everybody will promise you quick money. Everybody will promise you wealth. Everybody will promise you that if you do this, you are going to be successful, but nobody will tell you how to get there, what you need to do to get there, and how long it will take you to get there. I don't like to sugarcoat things. So this is why I'm telling you up front, keep at it, but don't go in blindly in any positions. Like seriously, it's inviting, like I said earlier, landmine. You're gonna step on one and you're gonna blow up your account and you're done for the day. So when if you got in at Amazon, for example, here at $17, or for let's just say this Amazon $1,300, your account size is $10,000. You got into a $1,300 position, which is 13% of your account. Now you're stuck in that position because that same contract is super down, so that when the day is good, when shop is running, Google is running, TTD is running 2,000, 1,200, 1,400%, you just don't have money to put into this trade because you blew it up when you were trading, when you were taking this bad trades, when you were trading on this bad days where you should not have been trading, you got stuck in a bad position. So when the day got good, when the day was better, when there were many positions that you could have taken, you were just not in the game. So in order for you to be successful, you have to stay in the game. And the way you stay in the game is by avoiding bad days, landmine days, like I told you before. So just avoid trading. Simple as that. But this day, absolutely banger. We got so many good positions. But the only way you would have been able to take advantage of this good day was either you had a big account or you avoided trading on bad days like this and saved your capital so you can actually take advantage of good days. Come week 3, another absolutely amazing day, week for us. So for week 2, again, we took about, I believe, 17 trades, and we had about 2 failures. Week 3, we took about 23 trades and had 2 bad trades. So amazing success ratio. You should be making money. We had 800, 800, 800, 332, 236% gainers. So there was no reason for you to not make money during this time. So like I said earlier, if you didn't make money this month, you are either not following rules that we gave you or making mistakes that you should look into right away. So week 3, amazing. Monday, we took this shop trade. Shop kind of struggled this week. So if you see here, we took Amazon shop a lot. But then after having this big day on Friday, shop kind of slowed down. So we had like one bad trade with shop. We followed the stop losses and got out with 40% loss. So we followed the rules, saved ourselves good amount of money so that we can trade for another day. And Tesla was another one that didn't work out good. Could have exited out of it earlier, but Tesla was just trading sideways and teasing big moves throughout the week and throughout the day, where it looked like it was going to break out at any moment. So that's why I stayed in it, and it kept doing that on that day. It did the same thing on Thursday, it did the same thing on Friday. But at Friday was like, all right, no point of return. So I exited out of it. That actually trade went to about $4 or $5, $11.50 on Friday, but we were already out of it because we followed the rules. No regret there. But only 2 losses. Another great week where we averaged like about 4 to 5 trades every week, and still managed to make a good amount of money. And then comes the last week. Last week was absolutely disaster. I think it all started it started with it being a holiday week where it was a 3.5 days week. So it wasn't a normal week to begin with. And then the premiums were all wacky. Most of the names were trading sideways, not doing much because it was a holiday week. The volume was low. So these are the notes you should be taking. So whenever something like this happens, whenever Thanksgiving comes, I go back to last year's TradeLog. year before that's TradeLog, year before that's TradeLog, and I look at the mistakes I've made and be like, okay, so I went in too big where I should have kept my sizes small. I didn't pay attention to the expiration date and what I should be doing. I traded midday where I should be only be trading like first 1 or 2 hour of the day. All this little notes that I took throughout the week um, helped me trade and navigate through this particular week better. And this type of notes will help you. So going forward, or even right now, if you're writing trade log for this week, write all these things down so that when the next year you can go back and refer to this. Now it's a holiday season starting, so write down notes on November, like how was November in 2021. Do you remember how was November in 2020? No, you don't. Nobody does. I don't either. But I can go back to my November 2020 trade log and refer to it and be like, all right, this is what happened in November 21. It was a great month. It was bullish. So history usually repeats itself. Circumstances are most of the time different, but in the market, there's a saying that what is happening right now in the market has happened before. So if you keep track of the history, if you keep track of every single trade, every single moment, every single week, you not only you will learn, but when market gets tough, you can go back, or there are unusual circumstances, you can go back and refer to the notes and learn from it and be like, all right, this is what happened. So if you're going into December, take notes, like, be like, all right, this is what happened. This is what happened. As we go closer to Christmas vacation time, volume started going lower, all that sort of stuff, notes, so that when the same time comes next week, you're not only better prepared, you know which mistakes you need to avoid this time around that you made last time. And that is the only way you're going to get better year over year. Because if you're trading blindly, you're just taking like, all right, you know what, whatever, I'm just going to go ahead and trade it, see what's what. It's never going to work. You're not taking this job, you're not taking this profession seriously. You think that this is a game and that this is something that is very easy. I don't know how you got started and got invested in trading, but most of the time, the reason people decide to trade is because they think it's very easy to make money in stock market. Just because XYZ made money or got rich, I should be able to repeat that results as well. But you don't know what XYZ has, like what kind of work that person put into before they achieve that level of success. So don't let it fool you. It's a hard work. And it's not hard work as in like you will have to stand on your feet and like stay away and do physical work. It's hard work as in you need to, it's a lot mental. Like you following rules is hard. Making plan is hard. Sticking to plan is hard. Taking this notes and following the process and doing all this stuff is hard. But if you do it, and if you do it well, nothing can stop you, because this profession, people get so attracted to trading and investing is because the results are tremendous. And there is one of my absolute favorite saying is that the only way you will get rich is if you let your money work for you. If you are trading time for money, you will be able to live comfortable life, but you will never get to a point where you will achieve financial freedom, because everybody has limited time. And if you're trading time for money, there's only so much money you can make because time is limited. But if you follow this process, and if you learn how to do this right, and if you put in work, if you follow rules that we give you, if you take everything we say seriously and treat this as a profession rather than just something that you do in your free time, you will get to a point where you are trading money for money. You're letting your money work for you. And at that point, you will be financially free. But to get to that point, that road is not easy. And there are lots and lots of ups and downs through it, but you just have to stick to it. Don't be the person who I'm going to try out trading, see how it works. After 2 months, you know what, it's just not for me. I lost like about $5,000. I don't think trading is for me. Maybe I'm just not good with numbers, or the numbers that you need, or the numbers or math that you need to be successful at trading, you learn that in 6th grade. So don't blame it on numbers, or don't blame it on luck, that I'm not just lucky enough to make money. It's, you just don't have temperament to put in time and work that's needed to be successful. Anyway, that's enough of that. I'm sorry. It's just, I'm very passionate about trading. So when I see people making this mistake, and when I see people giving up on their dreams just because it's a little bit harder than they expect it to be, or they expect it to be quick, rich scheme, quick, get rich quick scheme, it just bothers me a lot. But enough of that. I hope you got the point I was trying to make. Anyway, so for week 4 come, and because I took the notes, because I knew what I should be accepted on like a overall big scale for this week, I cut down my positions in half. I got in and out of trade quickly. I did not take trades for, like, if you look at the previous week where we were taking like about 5, 6 trades every day, instead we took about 1, 2, 3, maybe 3 trades, quick trades, like 10, not even 10%, like get in, get out. If it doesn't work, you don't wait around. Take quick profits. So rather than waiting for 20%, I took profit at 9%. If stocks if it was moving slow. So these are some of the things that I learned from my past and the mistake I have made before. But that's how I was able to turn this week around. And we had 1 bad trade in Amazon, because Amazon absolutely tanked this week. There was no coming back for those 3,800 calls that we took on Monday. Should have stopped out of it. So that's one mistake that I made this week. I should have stopped out of it like at about 6 or 7. Could have saved myself some money, but I didn't. So that was one of the mistakes that I made this week. But other than that, we took very few trades, most of them successful. We'll still have 2 positions open that expire next week. So we'll see how that plays out. But other than that, slow week, 3.5 trading days. So I tried my best to not take forced trades, and was very, very selective. So like on Tuesday, only one trade in Tesla, and that too like sold, boom, like half a position sold here. And then on I believe this was a day before, this was Wednesday, and we took about 3 because Nvidia, Shop, Google, all were going up on that day, so we made some good profit. But even though they were going up, I knew from my previous experience that the premiums are going to be very volatile, because Theta is going to be all over the place. Volatility was there, but the Theta was not responding well. So all that stuff that I learned from experience, and I was able to employ here and get good results. So 1 bad trade this week, but other than that, everything kind of worked out. So overall, this entire month, we had about 2, 3, 4, and 5. If this, let's just say this 2 fails as well, 6 There's 7 bad trades out of 2017 to 37, 40, 50, 60, 70 trades. So out of 70 some trades, 7 failed, that including this too. So great, almost 90% success rate still, even after that last week. And if you lose money when overall success rate is 90%, 85 to 90%, and then you're doing something wrong. And you need to look at what you're doing. Mistakes, you can always correct. Mindset is very hard to correct. So if you have a correct mindset, then you will be successful. You just need to correct your mistake. One mistake at a time. You don't have to be proficient with trading by next month. No, that's unrealistic and it's never going to happen. But you can correct one mistake at a time, 1 or 2 mistakes. Focus on top 2 mistakes that made you lose money this month and focus on correcting them the next month. Focus on not making the same mistake next month. And then once you correct that, once it becomes a habit where you're like, all right, my account is $10,000. I'm not taking anything that's over $700 positions. Once that become a habit, you can focus on other mistakes. But focus on 2 or 3 big mistakes that made you lose money and focus on correcting them. Focus on making a habit where you don't repeat that mistakes, and then you can focus on other one. I'm still making mistakes. After 8 years of trading, I'm still making mistakes. I'm still improving. I still don't have 100% success rate. I probably will never have, not probably, I will never have 100% success rate, but I can get pretty damn close to it. 90%. I want to aim for 95 next time, 96, 97. I want to get as close to being perfect as I can, even if I never get there. But if you strive for that kind of mentality and that kind of results, remember, I did not say I want to make $10,000 or $100,000 a month. Money, the dollar amount is irrelevant. If your success rate is 90%, and you still didn't make money, there is only 1 or 2 mistakes that you need to correct and you will be profitable. But if your success rate is like 60% or 50%, then you need to focus on first and foremost on making consistently profitable trade, because without it, there is no point in doing anything else. But once you get to like 70, 80% success rate, that's pretty damn good. 90% is almost unheard of in this industry. Like most people, if you are successful 70% of the time, you are a very, very, very good trader and you will turn profitable if you correct some of the mistakes. But I strive for greatness. So I aim for 90 plus almost every single time, every single month. That's what I strive for. And I don't care if I get there and not achieve the dollar goal. I don't have dollar goal that in my mind. I never set out with a dollar amount that I want to make. If you are chasing dollar, you probably will never have that, because at the end of the day, your mind, your whole focus will be on getting to that dollar number that you put as a goal. I want to make $1,000 every week, so I'll make $4,000, and that's pretty good. That's my goal, reasonable goal. I have about $50,000 account, whatever. It's a bad week. You down $6,000 or $4,000. You still have that $1,000 goal in your mind. So what are you going to do? You're going to take bigger position than you should be taking, because you're like, all right, if I take this bigger position, not only I will cover the $4,000 loss, I will get to that $1,000 mark that I want to get to. And guess what happened? That position fails too. Now you're not down $4,000, you're down $4,000 plus that huge risky position that you take, so 10,000, 6,000, whatever, you blew up your account because you were chasing that dollar amount. If you were chasing, I want to take at least 90% success rate, and you are at 70% or 80%, you'll be like, you know what, this is better than 70%. So I'm going to put myself, like, I'm going to break it. Unless I see a very, very, very good setup, I'm not risking losing any other trades because I want to maintain my success rate. You will be more selective in the trades you take. You will be more aware of the risk reward you're taking. You will be more aware of the surrounding market environment. Remember, we talked about this in the last webinar as well, where we talked about how to pick a winning trade. First phase of picking a winning trade is observing overall market and every single trade that you take, every single stock that you're following, observing. If you were to do that, you would have avoided trading last week. You would have avoided trading on Friday, half day, because you observe that overall market condition is bad. You observe that trades are down. You observe that it's only half a day. So you're like, not a good day to risk anything. So I'm just gonna not do it. Revisit it Monday. That's fine. If I lose out on some profit, no big deal. I want to maintain my success rate. And that is how you become picky. And one of the other things that I do want to talk about right now is don't be afraid to take a loss. I see this in people every day. So again, I made a mistake here with this Amazon call, right? I let it go to zero. It went down so fast, and I was doing other things that I didn't get to it until it was like 70% down. If you were in it, you should have been out at $1,000 loss. That's more than enough. Observation, you observe the market is weak. It's a short week, holiday week, so volume will be down. All these factors, external factors. If you do take that trade, you should have been out a long time ago. But let's just say, same thing. I remember I said Tesla here, this was like 88% down. And the only reason I stayed in this trade is because it was constantly teasing me with a bigger breakout. It was trading sideways. It wasn't breaking down where it would hit my stop losses. It was like at 1100 level constantly. And for Tesla to make $50 move is not that big of a deal. So that is how I justified staying in that trade. But if you look at here in this shop, I was out at 40% loss. I was like, no, not taking any. Market is overextended a little bit. It could continue to go up. So but it can still crash here. So I don't want to take any chances. So I was out at 40% loss. Same thing before too. So that is the point I'm trying to make, is that if you enter in a trade, you have to have a plan. Winning trade starts with observation. First thing, ask yourself, is it the best environment for me to trade as a small account holder or as a new trader? If answer is no, just make up your mind and be like, no matter what it is, unless market turns green, I'm not taking any trades. That's it. So that's all you got to do. Let's just say if you have a $10,000 or less account, right? So, and if you follow only the trades that I took that were less than or around $700, you still would have end up making, let's just say, if you took every single one of those trades, you would have end up making 5,600. But even if you missed half of those trades, or let's just say 70% or 60% of those trades, you would still end up with $2,000 to $3,000. $2,000 to $3,000 is 20 to 30% increase in your $10,000 account, which is a huge deal. It's not 20 to 30% return on investment. It's not something to just forget. It's a huge number. It's not like most people don't receive this kind of returns. So you should be proud of it. 5,600, if you made 5,000 on your tender, that's 50%. The point I'm trying to make is that you don't need to take these big trades. You don't need to take Amazon, Tesla. You don't need to take this huge shop, Amazon, Google trades. Stick to your rules. Take smaller trades. Only take trades that fits your account. Follow rules. Observe, prepare, make a plan, enter in a trade, and then stick to the plan. All this stuff that we talked about in last webinar, and I have all the rules that we talked about in Let's Follow Rules webinar, all the stuff, if you combine all this and put it to work, I guarantee you that you will be successful. There is no, absolutely zero reason for you to lose money in this market, in this month, where our success rate is 90% overall success. You have absolutely zero reason to not make money. So just follow it, learn, observe, put it to work, be patient. Don't be in rush to get to wherever you want to be. It's going to take time. Every single overnight success took years in making. Every single one of them. Nobody becomes successful overnight. It took years in making, but as an outsider, you're only going to see overnight success. Anyway, with that, I think we're at the end of the TradeLog review. If you guys have any questions, feel free to ask now. Oh, let me unmute you. Why? Just unmute you. You should be able to unmute yourself.
Yeah, no, it's fine, YB. YB, a couple of questions, since it's my second week. So now I can see that, what mistakes I did. I did only 2 trades with my $10,000 account and both of them went to zero. I did, Amazon and Google. So that was my first mistake because I didn't follow the rules, what you said that, sticking to the small trades. So that's the one thing I'm going to correct it in future. I just want to understand, a couple of things from the loss perspective. Let's say if we do, because I'm very tempted, I take trades or any other things, I do it at a glance. So if I do any trade, what's the loss, like if say any, options is down by 50% or 40%. So normally what's the trend you recommend, for Amazon, Google, or any big chip stocks, we should be out of it?
So there are two things. One, you should not be taking big trades. Like you said, you realize that. So I'm not going to repeat that point again, because those big trades like Amazon and Google, those are like 20% of your account size, right? So if 2 trades goes bad, you lose 40% of your account, which is not acceptable. And you shouldn't be doing that. Your maximum trade size should be like about 5 to 6%. So even if you lose 2 trades, it's 10% of your account, which you can recover back in maybe 1 or 2 good trades. So that is the goal of keeping the position size in check. But if you do decide to play these big names, realize that Amazon, Google, Tesla, those are very, very volatile. Shopify, those are very, very volatile names. So I have seen when I have seen those stocks or those options for those names go down 80% and then bounce back up to and go about 20 to 30% in profit. I'm pretty sure you guys have seen it too, if you are in the trade long enough. So those are volatile names. So when it comes to those names, there is no straightforward answer where I'm like, all right, you know what, 60%, just get out. good rule of thumb would be about 70%. But again, it's very hard to determine if you should have stopped out or not. But there are few things that you can do. Wednesday or Thursday, and it drops 70, 80%, most likely it's not gonna come back up because theta decay will start to get extreme. It will need bigger and bigger move with every passing day. So if it's Wednesday or Thursday, 60% would be a good place to stop out. Friday, it's already a lotto, so it's the theta is already priced, the option premiums are already out. A few of the things that you can do, if you entered in a big position on Monday or Tuesday, like Amazon and Tesla, close those position no matter what and when at the end of the day, Wednesday. Because when Thursday and Friday comes, the theta decay will be so extreme that it will need a huge 60, 70, $100 move in order for you to become break even. So if you open big positions Monday or Tuesday, close them out by the end of the day, Wednesday. So that's one rule you can follow. Another you can follow is like, don't open any big positions on Wednesday, Thursday, and Friday. Only open on Wednesday or Monday or Tuesday so that you can get out. But whatever, you can say whatever position size or whatever you can salvage some of it. You can stop out at 40 or 50% loss. And you'll be like, all right, you know what? I give it a try. It didn't work. Even if it runs Thursday or Friday, you follow the rules and you save yourself some money, right? So these are some of the things that you can do. But again, the best thing you can do for your account size is to just avoid it.
Right.
Second best thing you can do is only trade it on Monday or Tuesday and close that position on Wednesday. Third best thing you can do is follow very, 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 very strict stop losses. Or if I entered in a position, let's just say at 25 or 22 or 18 or even 15 or 13, and just wait. There are chances, and most of the time this happens, even if I have like a 90% success rate, 80% of those positions, or say 70% of those positions, will go down before it goes up. Only some of them are breakout positions where it just goes crazy, where most of you don't even get a chance to enter in it. So if you just wait long enough, you will get better entry than I do. And in that case, even if I break even or close it at 40% loss, you will probably close it at like 20% profit because you entered when I was 60% down. Right. So that's the third best thing you can do for those big positions. But I say stick to the rules until you are at a point where you can afford to enter in those positions. Just avoid it.
Good. Thank you. Another question might be, let's say even if I buy a small trade for Microsoft and I buy it, let's say on this Monday, and my expiry is, let's say, on 10th of December, which is this Friday, but the following Friday. And I bought a $340 contract. So during the, let's say on the first day only, when I bought 340, the stock price was 335. And it moved from 335 to 338 or 339, 340. And I made some profit on the first day. So will it be advisable to close the trade on the first day, or we should wait for the, a couple of more days?
No, you should, if you are in profit, take the profit. I always say that. So I'll tell you what I do personally, right? And again, the same example, Microsoft the trade that you gave me, this call right here. I entered on 17. The expiration date was 26. I exited from that at 285, 26% profit on the same day. I didn't even wait until like next day or the week after that. I see 25% profit, I take it. 20 to 25% profit is good, is very, very good. So even if its expiration date is next week, don't be greedy, take it. So if you bought 3 positions, at least sell one, like, right? If you bought 3 contracts, sell 1 contract at 25%, keep the other 2. If it goes to 40%, 50%, sell 1 more, keep 1 more, and keep the other one. And then if it goes down to back to break even, you sell the third one, and then you wait for it to go down even lower, and you can enter in the same position again, right? This 225 one that I'm talking about, it went to 285. I sold it. It went to 130. After that, I bought more. And then I think it was somewhere around here in this week where it went to 625. And I sold at 177% profit. But any single positions that you take, 236, I sold my first position at 20. 149, I sold first at 36. 128, sold first at 19. 177, sold first at 26%. So I
YP,
see profit, I take it.
sorry, YP, my son fell down. I have to leave right now.
Oh, okay. Yeah,
Yeah.
no worries. Go take care of it. I hope he's okay. All right, everyone. Let's hope that his son is okay. Any other questions? All right. If you don't have any other questions, we will go ahead and end this here. Thank you once again for all of you for joining today and spending your Sunday afternoon with us. And hopefully you learn a thing or two and it will help you become a better trader. One parting note, this coming week is going to be very tricky to trade and navigate into. So if you have a smaller account, if you are a new trader, be very, very, very careful. Be very picky with the trade you take. You don't have to trade every day, even every week, to become a profitable trader. It's okay to not trade. Cash is also a position. Remember that. So just be very careful in this week, okay? All right. I hope you guys have a great rest of your day, and I will see you all tomorrow.